All right. Good morning, everyone. Welcome back to the Sensa Edge. This is your host, Zoe Beer, the Iron Condor, the strategy most traders use wrong. What if I told you when executed correctly, it's a game changer? Let's find the edge. Before we jump in there, let's start with a joke. How do you get an elephant out of a car? The same way you got him in there. And now, for our 5,000 pound elephant in our room, the Iron Condor, everyone has talked about Iron Condors and explained them like a millions of times. Anyone who's been trading options for a while knows what they are, how they work, and how they can explode in your face if used improperly. What most traders do not realize is that if used correctly, they can be a great addition to any trading portfolio. You just need to find a bit of edge. For context, the market does not price in a directional bias. There is no preferences to calls versus put. It does, however, price in a volatility opinion, and that opinion is wrong roughly 100% of the time. It either underestimates volatility, options were underpriced, or overestimates it, options were too expensive. Your job is to figure out which is true before putting on a trade. We can do this with two tools: implied volatility versus historical volatility, the Bollinger Bands. Let me bring up my screen and then jump in over there. Right? Is implied volatility greater than historical volatility? If so, you have a good candidate for Iron Condor. If not, maybe move on to something else. Or the Bollinger Bands expanding or contracting. Expanding, not a good candidate. Contracting, much better shot at making the trade work. Again, to find a candidate, you can will screen over the stocks where yesterday's Bollinger Band is lower than today's, and preferably the last few days have all been shrinking. Once you have your list of candidates, check the implied volatility versus historical volatility and make sure that generally speaking, IV is over HV. At that point, choose the delta you like, with use like 10, set a stop, which is the secret to a successful Iron Condor campaign, and slap the trade on. Again, why does that make sense? Again, let me bring the other screen. Again, picking up the SPY here in this Bollinger Bands and implied volatility and historical volatility. There is a simple statistical trade that is always available. There is quite a lot of bit of volatility in the markets today, so premium should be relatively high. It fits the criteria of income trade that so many traders are looking for. The width of the Bollinger Bands is currently shrinking, suggesting a consolidation period for this particular SPY trade. Again, the risk of Iron Condor, as we move on in this particular tab, you can see this Iron Condor, which is like a four leg strategy. The risk here in the Iron Condor is mostly in the gap. If the underlying gaps hard through your strikes, you will realize a large loss one way or the other. The other risk is hope. When underlying approaches your loss point, many traders will foolishly hold on, waiting or hoping for a reversal and not simply taking on the loss. Taking loss timely is a very important part of this trading. Let's go ahead and build this Iron Condor strategy for SPY and see how we can like trade from it. Going into the sensor market, I already picked up the option strategy over there. Option strategies, Iron Condor, the SPY, which is trading around $604.50 here. We can place this particular trade. Once I come in there, the four leg strategies, which is already pre-built, I have adjusted this particular thing. You're buying a put position for 587. You are selling this at 588. You are selling this call, which is C. You can see that in green at 614, and you are buying a call at 615. And this expiration date, shooting for this particular Friday, February the 14th, which is coming up in pretty much 3 days or 4 days from now. Right, this is the range here. The current code for this, which is a credit spread around like 0.14 or 14 cents, which multiplied by 100, the credit, it's a credit spread, $14. The maximum loss we see is $86, which is a break even, which is anywhere goes below 587 or above 614. Anywhere in between this particular price range is a good solid $14 profit per contract. right? Again, the risk is $1 less than the credit, which is 28 cents. And at the moment, as you see, again, credit 0.14. The stop level is trader's choice, but I would choose the short strike depending on the timing. The risk is around $86 with a reward of $14. Hold until the expiration or stop level is hit. All right, let me bring back my screen and then finally conclude this. The Iron Condor can be a great addition to a long only or short only portfolio as part of the income generating component. Just be sure to control risk and use prudent money management and hold to your stop. Again, join us daily for market insights, trade ideas, and actionable intel on all things volatile in the market. Be sure to subscribe, leave a review, and follow us on the platform. Trade safely and allocate responsibly. Thank you all.